Hello traders, welcome back to the channel. This is Vishal and you're watching weekly sectoral analysis. I wish all of you a very happy Merry Christmas. Well, let's start with the video and what we can see that the trend continues on the upside in the Nifty spot in the daily and in the weekly time frame charts. Now, in terms of resistance, the first resistance according to me is this particular high at 21,600. Okay, due to some obvious reasons. And after this resistance, the next one will come at somewhere around 22,489. That means it's nearly about 22,500, which is in the weekly charts. Now, what we can see in the weekly RSI, that the weekly RSI is at 74, the daily RSI is at 71.91, that's 72. So it is a clear sign that markets are a bit overstretched, but there are no top out signs so far. In between over here, there were signs that the momentum is weakening or something like that. But market refused to go down. It gave a bounce back suddenly. You can see this particular bounce from 20,780 till all the way till 21,570. And then after this bounce, suddenly we came down probably around 300 points. And then suddenly we bounced back after that in the next 2 days. So in extreme short term, if you just open the hourly time frame charts, all right, if you just open this time frame, you will understand that within this zone over here, market has just been going down, up, down, again up. So in extreme short term, I would say that the market is consolidating more or less. It is trying to possibly cool down. It's trying to take a breather because this particular momentum, especially post this point, has given rise to a lot of volatility, and any trend which wants to continue on the upside needs some sort of consolidation or a breather in between, and that is what is happening right now. Now there are two types of corrections. One is time correction, one is price correction. So far we can see this is just a time correction, but in case if the Nifty spot manages to close below 20,900 and sustains below it at least for a day, then probably we will be able to test lower levels. And in fact, it would be better because for swing traders, there'll be a lot more stocks coming up in a zone where the risk reward ratio for the bulls will be much favorable, because as of now, it's very, very difficult to find new trades, right? Let's have a look at the Bank Nifty. Bank Nifty, we can say that again, it's more or less consolidating. The trend is up in the weekly time frame charts. The trend is up even in the daily time frame charts, but it is again over here, it is consolidating. My favorite time frame is hourly time frame charts, and you can clearly see the way it is moving up, down, again up, down, again up and down over here. So more or less in extreme short term, it is consolidating, and it is actually needed for the rally to continue. Okay. Immediate support according to me comes at 46,780, a close below which will lead to obviously lower levels like 46,327, and on the upside the next resistance is coming near 49,000 levels. All right. PSU banks, we can say that the way they have rallied, it is nice to see even SBI participating. But after this rally, just a little bit, not a lot, but just a little bit of consolidation would be helpful to cool down the volatility, and possibly the risk reward ratio probably would be slightly better for the swing traders. Now this is one stock which was consolidating, and it has managed to close above this resistance. If it stays above this level, 768, 770, then the trend will continue on the upside. And one more stock from my side is Union Bank. Now Union Bank currently is looking extremely lackluster in the daily time frame charts. There is nothing much to see over here. But if you check the chart in the hourly time frame chart, we can see there is a lower low in price and higher low in RSI. So the way it has bounced back, it is really nice. If it manages to give a breakout in the hourly time frame charts, then decent short-term momentum on the upside will be built, and swing traders should keep an eye on this particular stock. All right. Private bank. Private banking pack, I should say, in extreme short term, this rally has been way more faster than what happens in normal market scenario. This rally has been way too faster. In fact, if you check the RSI over here, we had a higher high, we had a lower high, and then after this negative divergence, we had a sudden rise in the price, and then if you check, the negative divergence completely vanished, and after this negative divergence vanished, suddenly the prices started correcting. So again, over here we can see some sort of consolidation happening. Close below this level will lead to little bit more profit booking, not a lot, but little bit more. And according to me, stocks like HDFC Bank, like now this particular stock has rallied pretty decently. It actually needs some sort of price correction or consolidation, but it is refusing to do so. The trend will stay up, but as a swing trader, if I want to initiate any trades, I would surely, think twice before doing anything, because at an extremely overstretched levels, it makes no sense to park your money. Even ICICI Bank is a stock which is a heavyweight, but you see the weight has come down, and now it is trading at the support level. So swing traders should keep a watch on this particular stock. And one more stock from my side is RBL Bank. Now, if you check the hourly time frame charts very, very closely, what has happened is once the prices started moving up higher, again it came down. When it came down the next time, we can see a hammer over here. So at times, I feel that rather than the higher time frame charts, lower time frame charts at times gives more insights, not always, but many times. So swing traders should surely keep a watch on this particular stock. Energy pack. Now energy pack, if you can see pretty closely that the trend is up in the weekly time frame charts. RSI is near 85, 86 levels. In the daily time frame chart, the trend is up for sure. But if you convert this particular chart to a line chart, we can very nicely see that we have a higher high in price and a lower high in the RSI. So this is a classical negative divergence, and this is a sign that the momentum is loosening, the momentum is waning, and a close below this particular candle 31,804 will lead to some sort of price correction. And if you check the stocks, especially like BPCL, HPCL, these stocks, possibly even IOC. Now, these three stocks, especially IOC, HPCL, BPCL, obviously they are looking very strong in an uptrend. But if you check the weekly charts properly, even the daily time frame charts, you will find out that these stocks are a little bit overstretched. If you're holding these stocks as a positional trader from lower levels, I guess it's time to be vigilant. You can continue to hold them. No need to panic. No need to book out your profits and just get out of it. Yes, you can surely book partial profits, but keep a watch on your trailing stop loss. As soon as your trailing stops get hit, you should think about exiting these stocks because they've rallied way too fast. Now, metal pack. Metal pack, you can say that the trend is up. The way stocks have rallied, it's pretty nice. Recently, there was a sharp correction when Nifty gave 300 points down, but there was an immediate pullback also. In the metal pack, I guess the overall sector is looking fine. But as of now, if I want to initiate any trades or look at any attractive stocks to keep a watch on, then it will be Jindal Steel and Power. Jindal Steel and Power has bounced back pretty nicely. And I guess once it sustains about 740 or 745, then we can see some fireworks on the upside. Auto pack, according to me, needs some more consolidation before it tries to, gasp for the next rally, because we have some sort of negative divergence over here. So some sort of cool off, some sort of consolidation is surely required. Finance pack, I should say the trend is up. Just few days of sideways move or consolidation will be more interesting, and it will result into more favorable risk reward ratio for the bulls who wants to look for more swing trades. Consumption pack. Consumption pack, you can see that the trend is up and we are at a resistance over here. This is the 261.80% Fibonacci extension. And what we can see is that we had a negative divergence, but prices are refusing to come down. I guess close above this particular high will result into the rally continuing, and close below this low will result into some more profit booking. Now, if you have a look at this particular stock, DMart. So what has happened over here is, again, we have a lower low in price, but a higher low in RSI. And the way the stock is going up, it's looking interesting. I guess as a swing trader, one should keep a watch on this particular stock, DMart. FMCG pack. FMCG pack, I should say, it has started trending pretty nicely. And the king of the stocks, ITC, is looking okay. It's not looking great, but as a swing trader, you should keep a watch on the stock in the hourly or probably the 30-minute or the 2 hourly charts, whatever is comfortable for you. A breakout in the stock will lead to higher levels. Infra pack, I should say, trend is up, but we can see a negative divergence in the price. Nothing more interesting over here. Surely requires some sort of consolidation, some sort of profit booking. But recently there was some telecom bill passed by the ministers recently. And what I can say as a technical analyst, as a trader, that the stock has been bouncing from a pretty decent support band over here. I guess a close above 1011. This is the recent resistance. Close above this level will lead to a new short-term momentum on the upside. IT pack. IT pack, I should say, the trend is extremely strong in the weekly time frame charts, and I doubt that it's going to stop very, very soon. Only thing is that the rally which has continued on the upside has given rise to a lot of volatility. It is pretty surprising, but the reality is that the ATR, the normal daily range of IT pack, which was 385 points, has suddenly gone up to 662 points. So according to me, the volatility should cool off. Once it cools off, possibly you can look for new swing trades. As a positional trader, if you're holding any stocks, then there is no issues. You can continue holding them with a trailing stop. Pharma pack, as of now, you can say that it is more or less consolidating. So probably I would like to wait few more days and then only share my view. You can see even in the RSI, it's pretty much sideways. So I would like to wait and watch and then share my view on this particular sector. PSC, again, same view. I would not like to initiate any new trades as of now for sure. If I'm holding old trades as a swing trader, as a positional trader, I would continue to hold them with a trailing stop loss. But at this juncture, if I want to jump in with my own money, then I would refrain, because the readings on the chart are looking extremely overstretched. You can see the weekly chart at 86, daily RSI at 72, and you can see the way it has gone up. It requires some breather, some consolidation, some profit booking for sure. Now, in the real estate pack, we are near a resistance zone. You can see in the Fibonacci extension, which is 361.80% Fibonacci extension. We also have a negative divergence. You can see a lower high in RSI, a higher high in price, but the prices are refusing to go lower. As of now, this is not a very good time to initiate new trades in real estate, but if you want to, and then I should say that other than Godrej, Godrej Properties, I would not like to watch any other stock right now, because this stock has not performed recently. And as a swing trader, you can keep a watch on this particular sector. Mid caps, I can say that they are refusing to come down. If they consolidate a lot, I'd just like to remove this Fibonacci. If they consolidate too much, then possibly once again the mid cap sector will start looking attractive, more attractive for swing traders. But if they close below this low, then possibly lower levels will be visible on the downside in the mid cap stocks. And just understand one thing, that these stocks are not large cap stocks. These are mid cap stocks. So any sort of correction will, if it comes, if at all it comes, it can be very fast. So just keep a watch on your trailing stops. So summing it up all, I would say that trend is strong. Trend is on the upside. But the recent rally which we saw post 20,000 has given rise to a lot of volatility. Some sort of consolidation, some sort of profit booking is very much welcome in the market right now. But again, market has its mind of its own. We don't know what's going to happen. A close above this, probably you can expect that momentum will continue on the upside, and a close below 21K, sorry, 20,900 will probably, give birth to new lower levels in the market. But this will be just a short-term profit booking, nothing more. All right. So trade less in the next few days and trade wisely. Thank you.